Hello everyone, this is Derek Smith with Comprehensive Credit Repair with today's credit repair tip. And today we're going to talk about debt and loans. While credit cards are important, you must also look at the loans that you're working with. Loans are valuable financial investments that people should not ignore when it comes to what they're doing with their money. It is through loans that people can get the most out of anything they want to acquire. For instance, you might be interested in getting a new car. Maybe you want an upgrade, or perhaps you prefer to buy a new car. You probably cannot pay the entire amount up front. A new car could cost tens of thousands of dollars. You might not have enough in your savings or checking account. This is where a loan can come into play. A loan will provide you with the opportunity to cover the costs associated with a high-end purchase. However, while this can be helpful for your purchasing needs, it can also hurt your credit rating if you're not cautious. A loan will require regular installment payments over time. You must look at how well you are managing the debt that you have incurred. The loan will specify the term of the loan, the number of monthly payments required to pay off that loan, the minimum payment that you must make on your loan each month, and the interest rate of your loan. Being able to make the required payments on your loan over a fixed period of time is critical. You can also make more payments beyond the minimum to reduce the total amount of interest you owe on your loan. You have to be aware of how your loan is going to influence your credit rating. Your loan is going to impact your credit rating by, number one, how much you owe on your loan, and number two, how the value of your loan changes over time. You should be at a steady rate where your loan is being paid off consistently on time. The principal on your loan, or the amount that is on the loan before interest is added, should be considered as you work toward paying off that loan. You should look at, are you ever late on your loan payments? This includes cases where you don't make a payment during a certain period. And you should look at how much interest is being applied to the loan amounts. The total amount of interest on that loan should decline as you continue to make payments. There's always a chance that your credit score will decline if you're not careful. Your score may drop if you fail to make payments, or if your payments are less than what you agreed on when the loan was signed. Even more importantly, the value of your loan might be a factor. Those who make too many loans will have lower credit scores for many reasons. They will have lower scores because they are spending more money than what they might be able to afford. They're getting lots of inquiries recorded on their accounts as well. A person's credit score will drop dramatically if they are unable to manage all of the loans that they hold. It is easy for people to lose track of their loans because they have different interest rates, payment due dates, and schedules. Those who have loans must be very careful when it comes to how they're paid off and how they can influence one's credit rating. It is vital for you to ensure that the loan can be covered and that there's a plan to get a loan managed without problems. Also, the most important part of a loan is the interest rate. Those who have a better credit score will be offered better interest rates on their loans. Then again, those with such good scores will likely be approved to get such loans in the first place. You'd have to improve your credit rating to get a better rate on a loan, not to mention the chance to be accepted for a loan. You can also get your rating up to where you may consider refinancing your loan. This is a point about handling loans that will be discussed later in subsequent videos. Look, fixing credit is difficult, and I'm a pro at it, and I can do it for you. Learn more about how I can help you raise your credit score at www.comprehensivecreditrepair.com. I hope you learned a little something from this video, and I'll see you in the next video.